In a move that reverberated through global financial markets, credit rating agency Moody's downgraded its outlook on China's sovereign debt from stable to negative, casting a shadow over the country's once promising economic trajectory. This decision, taken on December 5, 2023, reflects Moody's growing concerns over the sustainability of China's debt-laden economy and the potential impact of slower growth on its ability to repay its obligations. The downgrade underscores the mounting challenges faced by policymakers in China as they navigate a complex economic landscape characterized by rising debt levels, a slowing property market, and demographic headwinds. Moody's cited these factors as key drivers behind its decision, expressing particular concern about the potential for Beijing's support for distressed local governments and state-owned enterprises, SOEs, to weaken the country's overall fiscal strength. Despite maintaining China's A1 long-term sovereign debt rating, Moody's painted a sobering picture of the country's economic future. The agency expects China's GDP growth to slow to 4% in 2024 and 2025, a significant decline from the double-digit growth rates that China has enjoyed for much of the past decade. Moody's also projects that China's growth will average just 3.8% from 2026 to 2030, further dampening expectations for the country's economic performance. The downgrade has sent shockwaves through global financial markets, with investors reassessing their risk appetite for Chinese assets. Credit default swaps, CDS, which measure the cost of insuring against a government default, rose 4 basis points from Monday's closing level following Moody's announcement. China's finance ministry expressed its disappointment with Moody's decision, maintaining that the agency's concerns are unfounded. The ministry pointed to China's resilience in the face of global economic headwinds, highlighting its ability to maintain a steady economic recovery and advance high-quality development. Moody's recent downgrade of China's sovereign debt outlook to negative serves as a stark reminder of the challenges faced by the world's second-largest economy. While China has enjoyed remarkable economic growth over the past few decades, its trajectory is now clouded by rising debt levels, a slowing property market, and demographic headwinds. These factors could significantly dampen China's economic potential and raise the risk of a recession. If China's growth slows as projected, it is conceivable that the country could lose its position as the second-largest economy in the world. India, with its young and growing population, has emerged as a formidable challenger and could overtake China in the coming decades. This shift would represent a significant transformation in the global economic landscape and have far-reaching implications for international trade and investment patterns. China's policymakers face a critical juncture as they navigate the complex economic landscape. They must address the country's debt woes, revitalize its slowing economy, and adapt to demographic pressures. The success or failure of these efforts will determine whether China can maintain its economic momentum or face a potential decline. As the world watches closely, China's economic trajectory will undoubtedly shape the global economic landscape in the years to come. Thanks for watching.